Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, July the 12th, 2012. Well, a continuation of the trend to the downside today, and a candle has made a lower high and a lower low. Previous day's trading we had a doji type candle that did set the market up for a potential change of trend. Change of trend requires confirmation. We haven't seen the market trade anywhere near that previous high. So a continuation of the trend to the downside. Obviously the resistance around the top of the cloud here was just too great for the market to trade anywhere near there, and the market opened up high, traded down to test below the 1333 level, tested just below the support at the Kijun Center around 1330, and found buying coming in to close the market just up above the 1333 level. So 1333 is a very important level, and I've mentioned this level quite a few times, and we've seen that level hold as strong resistance and support, and now it's holding as support, and we've seen the sellers lose commitment down below that level. Previous days trading in the market traded just to that level and the buyers came in, so a significant level. In terms of the black candle, we have the sellers making net bearish progress, so a little bit different than the previous day where neither side made bearish nor bullish progress. Today they've made a decent amount, and it does suggest that the sellers have gained some more momentum, but they did fail to close this market with control. They failed to close below the midpoint level, and that could be significant. But by the same token, the buyers have haven't really taken strong control of this market. It's very, very weak control and basically neutral, even though the sellers are keen because they've closed below the previous close. Now, in terms of the Fibonacci extension, and we're examining the relationship of the current first time frame downtrend to the previous first time frame downtrend, and we saw the market finding support around the 168% level, and now we've closed down below there. The market did test down, and it seemed as though we were going to trade down to the 261.8%, and we haven't seen the market trade down there, but obviously the 161.8% at 1340 is negated now, and there is still a possibility that the market could test down to around the 261.8%, and that coincides roughly with the bottom of the cloud, so that is a very, very significant level. If the market does trade down from there and we see bullishness coming into this market, then there is potential for the market to change trend, but certainly no sign of that at the moment. In terms of the Fibonacci retracement of the prior uptrend, here we have the market being rejected from the 78.6% level and strongly rejected. Prior to that we had the market rejected twice from the 61.8% level. The 78.6 is not one of the more important levels. The 38.2, 50, 61.8 and 100% are more important, but certainly that 78.6 level can hold, and considering that we have this strong upside price rejection and the sellers losing commitment around this 1326 area, then there is it does suggest potential for a change of trend, so we do need to watch the high of the current candle. Now, if there is a change of trend, we do have very, very strong resistance at the top of the cloud, and we do need to bear that in mind, that we will need some very strong bullish activity for the market to trade up outside of that area. We also have a strong area of resistance around 1347, very close by, so very solid upside momentum will be required. But if we do close up above there, we have resistance around the Tenkan-sen around 1350, and then potential resistance around 1356, and a zone of resistance extending through some levels up to the 1370 level. In terms of Ichimoku, once again the market is neutral. We've been neutral for 1, 2, 3, 4, 5 days continuously, and that could be quite important to this market. The market is bullish in the medium-term time frame, and here we've seen the Kijun Sen hold as support for this market. Previously we saw the Kijun Sen hold as support here, so it is a significant level moving forward. In terms of the Tenkan-sen, however, we're trading below there. That's the green line, and the market is bearish in that fast-term time frame by trading below there, and we have been bearish for the previous 3 days, but certainly this 1333 level for the previous 3 days has come into play, and in an area just above and below there, it is holding as a strong area of support for this market. The Chico span here, the orange line, is above the corresponding price action, so it's supporting the bullishness that we're seeing in the medium-term time frame. But we have quite some mixed signals in all of the other time frames. So moving forward, the market is neutral in big picture terms. We're waiting for a breakout up above or below the cloud, which will give us a better indication of the overall direction for this market. But we do see support around the Kijun-sen for the medium-term time frame. We've seen strong price rejection from there. The sellers have failed to close with control of this market. They did lose commitment below the 1333 level, so 1333 and 1320 are very important levels, but we do have strong resistance overhead at the top of the cloud around the 1345 level roughly, and extending up to 1347.